Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Sunday, August the 23rd, the year's 2020. Let's talk trading. Time for the weekly open and gap. Before we get started, just a reminder, these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. And always, always, always have your risk management in place. Never lose more than you're willing to lose on any one single trade. And have your brain, have your mind right, as it was said in the Cool Hand Luke, the captain. Got to get your mind right. And also, make sure you manage the money. When you've got profit, make sure you don't give it back, because the market will take it back. So make sure you put it in your hip national bank before the market snatches it out of your fingers. Okay, for the gap, all the gaps are filled. Now, I just want to welcome some of the new people to the channel, new traders to the channel. And some of you have been asking about the gap. Well, the gap is simply, when the open on Sunday/Monday is below the close on Friday, that's a gap down. Okay, let's see. And do we have a gap up anywhere? I don't see. Yeah, here's a gap up right here. When the open on Monday is higher than the Friday close, that's a gap up. And normally price fills the gap. Every now and then on some couple pairs, they won't fill the gap. But usually it fills. So it's one of those trades to look for to make money. Now, and this is the dashboard, just if people want to know, traders want to know, dashboard. And it's set up with the gap, but it's also set up with the spread. The reason it's set up with the spread is so you know if the spread's kind of goofy or something, meaning it's like 10 when it should be like 1 or 2. So you notice some of these colors are highlighted in magenta. So I think, if I remember correctly, if it's over 2 pips, it's in magenta. Otherwise, it's just in whatever color you have it set to as the normal color. Okay, this is going to be real interesting because you see, this is the last full week of August, and this is the opening day of August, first trading day in August, and you can see, once again, we're inside of that range. And last week we broke out of it, and we broke into the first day of the year range. So if I scrunch the chart, there's the first day of the year range. And so you can see what price has done over the course of the year. But we're focused on these horizontal lines. So we've got the monthly open right here. So if price crosses that, you might pick up some pips to the downside. We've got that high break here. Might be more pips to get to the upside here. And also note, the high of the first day of the month is right near the low of the first day of the year. So right there's only 3 pips between the two of them. That's on the pound. You can analyze other pairs if you like. But one of the reasons I just stick with one pair for a long time is to show traders, especially new traders, you don't have to be hopping from pair to pair. Because when you do that, especially if you use the methods that I teach, you're going to miss out on a trade, and that might be the one trade that makes the difference between having a winning session and a losing session, because you want to put the statistics in your favor, and the only way to do that is to take the trades. Because if you skip a trade and that could have been profitable, well, hey, maybe the next 2 are losers. And maybe that one trade you would have hit your daily goal, hit it and quit. And we talked about whether or not you hit your goal and quit like a stop sign, or your goal is just a mile marker. We discussed that last week. And so once again, 15 pips above the monthly open, 155 pips below the yearly open. Inside bar. We are inside the inside bar range from 5 days ago. We are inside the weekly inside bar of 2 weeks ago. So looks like there's gonna be some inside bar action happening. And so on the daily, you can see here we had this inside bar, and that just means price has got compressed. And think of it like a spring. You squeeze it down, as soon as the pressure goes, it springs out. You see what happened here? The price just jumped out once, twice. And even here, it even went to the downside, not as much to the upside. So that's just something to be aware of when you're trading. And you can see here, we've got some inside bar action happening across here. Blue is the alert for it's happening on the current day, week, or month. Then gray means it's inside the bar. Red means it's below it. Green means it's above the high. And red is below the low. And in case you're wondering, the last monthly inside bar was down here, so you can see that was 4 months ago. And we're 443 pips above that monthly high. Okay, we're only 6 hours into the day. Not much happening on the ranges right now. No range over 100. You can see could just be a compressed day, but maybe when the London traders kick in, the boys and girls and non-binary traders in London kick in, maybe they'll expand that range. I would look for that to happen for sure. And right here, looking at the buy zone, you have the daily, weekly open, pivot point above, so we take the long trigger. That could have paid off once, twice, just for a few pips. Obviously, it wasn't anything great. Right now, you've got another buy zone trigger. So you could actually jump in on the buy zone trade right now. Rat, range too low. But there's something you can see here, because it's the first day of the week, the daily and weekly rat zones are the same. What you really want to look for is when price gets into the monthly rat zone, because that happened a couple of times last week, and then price came out and the red rats they were just eating cheese. They couldn't eat enough cheese. Couldn't eat it all, right? So we've already seen the daily pivot right here, 1.3133, with the weekly being 1.3137. So look for these pivots to get taken out. Why? Because we run the statistics. We've had some missed pivots this year on the daily. Had one last year and 4 in 2018. That's not too bad. And so long as you have your stop loss in place, you could take this trade, and you can see how many times you're going to lose. Of course, maybe price will move out and hit your stop and then come back maybe the next week or the next day and hit that pivot. But that's just trading. You can always enter a second time to get that pivot and make up that loss. And then some. Wick zone, price is in the lower wick zone at the moment. And just looking at the ranges once again, we're too early in the session. Nothing's really happening. You can see here compressed ranges, really not paying off. That's why you usually don't trade the Sunday, Monday, unless you're looking for a gap trade or a pivot. You just want to get your position in. And looking at scalping. Now, somebody asked me what was a perfect entry using the 3-level ZZ. And I told them, when we're in trading, don't think in terms of perfect, and don't think in terms of right and wrong. There's only terms of profitable and unprofitable. That's it. You look for profitable entries. You don't look for perfect entries. What would constitute a perfect entry? I mean, it's hard to say. Sure, you get in right at the line, but maybe you missed by a point or two. Does that mean it wasn't perfect? It doesn't matter. It's irrelevant. What is relevant is taking the profit if the market smiles upon you. That's what's relevant. So, here's a 3-ball. It opened above the 3-ball. Actually, there's a 3-ball. It opened above that mid dot, the previous mid dot, right here, midpoint of this candle. And I normally go long, and see here, it went up, and then it came back down, and then it shot back up. Was that a perfect entry? I mean, who's to say? Who cares? I mean, I got in. What a perfect entry would have been right here as it was moving up. It's like, it doesn't matter. So try not to focus on things that don't matter. And that's part of the problem with trading. Just like somebody out there in Creslick, they were talking about trading H4, and I said, you're not trading H4 or D1, you're trading price. This is it. You're trading price. If you buy at 90.7, right, you want to be able to sell at something higher than that. I don't care what chart you look at, because price is the same on all charts. How many times do I have to say that? You see, I just changed to a monthly chart. Price is the same. It did. There was no tick to make it change. I can go to 1 hour. Okay, it just moved. But still, the point now, it's back to where it was. It doesn't matter. And why people say, well, I'm trading this chart or the H1 chart or the D. It's like, no, you're trading price. And that's why I like horizontal lines, because it's the same no matter what time frame. The daily open's the daily open. The daily high, current daily high is the current daily high. It doesn't matter what chart I'm looking at. The only things that change with charts are those squiggly lines, the moving averages and stochastics and RSI and all those other, like I said, squiggly line indicators. And that's one of the reasons I got rid of them. I don't need them. Because you change the time frame, they change. So what good are they? To me, you say, well, okay, I'm trading, the M5 chart, and I'm trading with the EMA5 on the M5 chart. Okay, you're trading with the 5-minute moving average, a 5-period. Yeah, okay, all right. Thing is, doesn't matter. You're still trading price. So, I mean, and the thing is, I always try to correct that, because if you don't have these concepts right, and if you don't understand these basic fundamentals, it's going to mess you up in the long run. And there's some traders out there that have known about me for like a decade, and then they strayed away and they came back, only because they realized that all that other stuff was more or less hocus pocus nonsense. Once again, simple price action, trading at the line. I mean, come on. When you put the trade on, you don't know if it's going to be a winner or a loser. So just if you get the signal, put the trade on. Trust the statistics. That's all you can do. Put your stop. If it hits a stop, wait for the next trade. So, fellow traders, this week, come on. Remember, it's not what you trade, it's how you trade it. So get out there and drain the banks. Don't forget to